Welcome back, and joining me for a look at the equity scene is Nesi Chetty from Stanlib. Thank you so much for your time, Nesi. There is quite choppy trading, but nothing choppy about the gains that we have seen on the Resources 10 complex today, and particularly the gold counters, the leaders there being Harmony Goldfields and Pan-African Resources. What is responsible for this buoyancy there?
Yeah, thank you, Zanati, to you and your viewers as well. Certainly, we've had, I guess, a strong rally across most of the gold counters, still predominantly driven by higher gold prices. So you would have seen, I guess, Q3 quarterly earnings is in full swing. And if you look at these companies, they're still reporting a fairly healthy level of earnings. I mean, spurred on by a gold price which reached almost $2,672. I guess at the start of the week. So gold counters would have been up a strong 3%. If you look at gold companies versus the underlying gold price, I mean, historically they've traded in the opposite direction, but this year you've had the gold counters together with the underlying gold rally quite strongly. What you're also seeing, I guess, combined with a better outlook for earnings, is also some level of costs that have proved to be slightly lower as well.
All right. Well, Nesi, let us get us to some of the company news that came out of the JSE. Starting off there with the Primary Health Properties, they released their Q3 trading update. Of course, a UK property investor there talking about that in the 9 months they got extra rental income, and it seems that prospects actually look good. Talk to me about what came out of this counter today.
Yeah, I mean, overall, it was a very good result. I mean, remember, this was a company that listed a short while ago on the stock exchange, and was included in the OLP as well. So they're primarily a healthcare provider where they invest in flexible modern properties that have exposure to the healthcare sector. And you can understand, with an aging population, you had strong growth and demand for their assets. If you look at the overall rental mix, I mean, they would have generated an additional £2.7 million in additional rental income. On a like-for-like basis, they're growing at about 3%. Over the period, they would have done quite about 240 reviews. So they are expanding. I mean, the pipeline's quite healthy with about 40 up-and-coming asset management projects. If you look at the business in terms of how it's structured, they've got quite a big major redevelopment opportunity project in Brent and also South Kilbourne as well. Underlying business operations very strong. I guess if one looks at the balance sheet, I mean, they've done quite a bit of hard work in trying to refinance some of the expensive debt maturities. So they did a 170 million facility with Barclays, and then another 100 million pound extension with Lloyds. LTV is still on the high end at 48, but that will come down the next couple of years. This is a company that's had a very strong track record in dividends. I mean, they delivered now about 1.77p, so that's another 3% year-on-year increase. Overall trading very good and robust, but one would also keep an eye on maybe the LTV and elevated debt.
All right. Well, let's get into Quilter, their financial services. They came out with a trading statement for the third quarter, seeming that the financial metrics were better than expected, considering that traditionally the third quarter is usually the slower quarter. Of course, an increase there in AUM. Is it no wonder that the share price climbed 4% today?
Yeah, so very strong third quarter. I mean, they saw net inflows about 1.4 billion pounds. I mean, they had record inflows into their platform. And if you look at now where they sit in terms of group assets under administration, they're currently about 116 billion pounds. So that high net worth segment of their market, they've seen improved business momentum. Affluent segment still growing strong. They had a strong quarter there with gross inflows up 50%. And typically Q3 tends to be quite quiet. It's nice to see the turnaround. I guess the UK environment still very challenging in terms of the regulations. So there's certain, I guess, budgets, or uncertainty regarding UK budgets in the next year. And typically, I mean, the structure of the UK pension market and savings, if you look at that, I mean, some of the proposals coming through now, they will go through a period of possibly industry-wide consultation. But overall, I mean, the platform's growing. If you annualize, I guess, the the flows, what they're showing, I mean, it comes to about 5% of their opening AUM.
All right. Well, let us get to your stock pick for today, Nesi. What are you picking?
So it's a company that we've liked for a while. It's Spear Property Fund. It's a Western Cape property exposure, predominantly in retail and mixed use and industrial as well. I mean, leasing fundamentals, if we look at the market across SA, I mean, there's tended to be, I guess, the last 2 years a lot stronger in the Western Cape due to buoyant jobs market. I mean, you've had some success with BPOs also growing into that office sector. So Spear's done well, I guess, to grow their asset base. They're sitting at about 4.6 billion total assets. Their properties are now sizable. If you look at average value, up at about 157 million. The run rate in operating metrics very strong. I mean, year to date this year, I mean, occupancy is around 95%, and they're getting a healthy level of in-force escalations at about 7.5, with positive rental reversion till about July of about 4. So they've been acquisitive over the period as well. They bought a portfolio of assets from Emira, which was a combination of retail, industrial, and mixed use. High quality, 1.1 billion acquisition, NOI yield after fees about 9.5%. What we like about these type of deals is that, I mean, there's potential for further asset management that can be done. The gross rentals, if we look at it in industrial properties, are quite nice, anywhere between 71 to 82 at the top level. But it's a fund which has a very conservative balance sheet. LTV sitting at about 32. If we look at the forward yield, it's closer to about 8.5% with growth next year, and they're proposing now in the interims to pay about 95% payout ratio. So it's one, I guess, with an exciting mix of assets. And I guess if we look at the total portfolio, they're well positioned to benefit from the incremental positive recovery post the GNU.
All right. Well, thank you so much for your time and for your analysis on what has moved investors' money today, Nesi. That was Nesi Chetty from Stanlib.